This has been long overdue. I finally reallocated my funds so I can start a new series where I turn $500,000 into $1 million or more. Before I go any further, please note that nothing I say in this video can be construed as financial advice. I am not a financial advisor. This series is made solely for entertainment or educational purposes, where I trade my own funds utilizing my own strategies. I understand that not everyone can start off with $500,000 portfolio. I personally started with $2,500 back in 2014 and gradually built up my portfolio. So I will be making additional series where I start off with 100,000 and 20,000 respectively. Let me know in the comments below if you want to see a series with a different starting amount and what trading strategies you would like to see me engage. This spreadsheet that shown in the background illustrates my current positions, with the exception of AMD, which I said I would buy in an earlier video, and one share of VOO, which I bought today to compare how my portfolio is doing relative to the S&P. All of the other positions were entered at earlier dates. For this series, I will be trading stocks and options. I will not be shorting, nor will I be going on margin. However, I will be buying puts, provided that I do not go on margin, and will be selling naked puts. The brokerage that's holding this account does not offer future trading, so if you want to see me trade futures, let me know in the comments below and I'll start another series where I primarily trade futures. As you can see, currently 36% of my holdings is in tech, where I hold Apple, Amazon, AMD, Facebook, Google, Microsoft, Netflix, Nvidia, and a few shares of QQQ. I said in an earlier video that last night that I would buy AMD. Unfortunately, by the time I woke up, AMD had already gone up 5%. So I ended up buying AMD at the high today. That's all right, because I believe AMD will hit 100 within the next few months. I'm looking to also increase my positions in Facebook, Google, and Microsoft. All three companies have had record earnings, and I don't see any reasons why all three companies will not continue to have record earnings. I'm holding steady on Amazon and Netflix. I don't see a reason to increase or decrease my holdings for the time being. For Apple, I'm employing a wheeling strategy. I recently sold a 137 July 30 cover call against 100 shares of my positions. So if Apple goes above 137 by July 30, 100 shares will be called away. And if it's called away, I will begin selling puts. If it's not called away, I will continue to sell cover calls against my position. In addition to my stocks, I also have a 12% of my portfolio that is in 1 year out QQQ calls with a strike price of 325. QQQ is the NASDAQ 100 ETF. So I entered this position back in March when QQQ was trading around 320. My goal is to hold to this position for at least 1 year to take advantage of the tax benefits for holding an option for 1 year or more. I also sold QQQ 1 year out puts in March and again in May with the strike prices of 310 and 320 respectively. What this means is that if QQQ dips below 310, then I'm obligated to purchase QQQ, and in my case 500 shares of QQQ at $310 per share. And similarly, if QQQ dips below 320, I'm obligated to purchase 500 shares of QQQ at $320 a share. I sold both puts a little more than 1 year before the respective expiration dates, so the goal here again is to hold for at least 1 year, collect the premiums, and be taxed at a lower tax bracket. I've linked another video that explains how to profit by selling puts and collecting premium. Feel free to click on the link below if you want to learn more. So the other half of my portfolio is spread across several sectors, including financial services, Goldman Sachs and Visa, insurance, Aflac, defense, Lockheed Martin, healthcare, United Healthcare and Cigna, pharma, Pfizer, home improvement, Lowe's, energy, ExxonMobil and First Solar, consumer goods, Best Buy, and tobacco, Philip Morris. I've held United Healthcare for several years and don't plan on selling it anytime soon. I purchased the rest of the stocks earlier this year to diversify from being pretty much all in big tech towards the end of last year, and to collect dividends, and also because I feel good about these stocks. Looking at my non-big tech portfolio, I may increase my holdings in Visa, Goldman Sachs, Aflac, and possibly ExxonMobil, while holding steady on Lockheed Martin, Lowe's, Pfizer, and United Healthcare. As the economy continues to reopen, the usage of Visa will continue to increase. Goldman Sachs and Aflac are in sectors that are moderately inflation resistant. ExxonMobil is an inflation resistant stock, benefits from the reopening process, pays a pretty high yield that's looking safer and safer as the demand for oil increases. Stocks that I may consider selling are Best Buy, Cigna, and First Solar. Not because I don't believe in the long-term potential of these stocks, but rather because I need to sell something in order to buy more of the stocks that I mentioned earlier, and also because of the tax advantages of selling at a loss. So how did I do after one day? I ended up being up around $8,000 today. Almost all of my gains were from tech. QQQ went up 1.3% to, I believe, an all-time high closing at around 345. And because of that, my QQQ call went up significantly, and the value of the QQQ puts that I sold went down significantly, which in return benefits me. As far as non-big tech, banking didn't do very good. Goldman Sachs went down. Visa was flat, and I pretty much, I think if I took out big tech, I ended the day with a loss. But because big tech did so well, I ended up around 1.8%. This is contrary to VOO, which represents the SPY, which is pretty much flat today. My goal here is to continually and consistently beat out the SPY on my way to 1 million. And I'll continue to make this series, update this series as I make trades. Let me know your thoughts on my portfolio, what you are holding in the comments below. As always, thank you for watching, and please hit the subscribe button.